Alrighty, everybody. Just about to get started with SPDas for Sydney, Tokyo. Please hang tight. SPDas, the trading floor is yours.
Okay, thank you once again, Igor, and morning, everyone. Those who are joining from the eastern side of the world, and evening to those who are from the western side. Let's get started with the Tokyo Sydney overlap, 18th, 19th February 2025, and Euro USD daily chart flashing up on your screen straight away. What we are seeing, or what we have been seeing in the past several weeks, is the larger degree waves, both impulse on the higher side and corrective, uh, right across, bouncing right across the 61.8% Fibonacci ratio is complete on has been completed on 13th of January. It has taken almost 3 years for the entire cycle to complete. The first leg up and followed by a corrective decline. And what we are now seeing is a series of waves ones and twos. I think it's not only a series of waves ones and twos, but wave two is still unfolding, and it has still room to to produce a running flat, and the more each day is passing. So we started from last Friday, I remember, 14th of Feb, and now we are almost midweek, 18th of Feb, and you see the way price action is unfolding, and that's a clear corrective wave, uh, overlapping, and it's a standard flat or combination. Sorry, more looks like a combination. So as each day passes by, it's now beginning to appear that we are generally looking good for the second wave to unfold as a running flat. I mean, the second wave is still not complete. It's got some business to do with the sideways activity. So be prepared for that, brothers. And it's actually tell you what, it's good for us because we, all those longs that we initiated from 1.0280, 1.0300 levels and kind of booked partial profits. We've entered partially long side, but we still have. If you talk about the optimum level of entry, it is again around that mark, 300 mark. So if you have your limit orders around the 300, I already have one. I suppose around the 340 zone in the portal, and we've kept that as it is because you never know. One more high. I mean, we still have 3 days to go for this week and another 5 days. So we've got 8 trading sessions literally for this structure to complete as one leg higher, followed by a 5 wave decline lower. And I think today on the Asia side, it is today, and we should be having a trigger coming in the New York session. So be watchful about that. I think it's the FOMC. So that trigger element also is into consideration with the price action that we are seeing. It's been sideways for almost in euro. Okay, it's taken a slight 38.2% retracement, which is in line with the fourth wave of lesser degree, and also the stage could be setting up nicely for one more leg higher towards the 586 mark. All right, but okay, so the wave structure says it's either wave 1 and 2 over, or we've got 1 and A, somewhere higher B, and then we are going to see wave C lower again before the second wave could actually terminate. And that really sets up the stage for March, where we are all setting up for a rally. And this one is a very high potential trade setup. So even if you're going long at this price, or you want to go long a bit lower, it is fine actually. It's absolutely fine. But the only thing we are advising or humbly recommend is have your longs active. I mean, please don't get out of the longs completely. At least have some portion of the longs active all the time. The stop loss doesn't change around 1.02, double zero. Okay. And that note we can jump on dollar index. I'm searching for yeah. Normally I'm doing 80 gaps so that the stop loss that since I follow that stop loss that doesn't change. Otherwise, if you bring up another provider, the highs and lows are different. Okay, so it looks nice with the five wave decline, the larger degree trend shouting out loud that it's on the downside, followed by a three wave corrective rally, ABC also looking complete. And all the action is now on the right hand side where we've got an impulse lower. I'm going to switch quickly to an hourly. So we've got an impulse lower wave 1, 2, 3, 4, and 5, followed by an ABC up and ABC potential down. It's still in the works. And that wave 4, you see that this is a typical property of a corrective wave. Corrective waves are overlaps. They're mostly overlaps. See, you see like that A, B, and that rarely happens. A gap up in a correction. You normally have the overlapping waves. You see that that's an overlapping wave. So a very easy, that's an overlapping wave. You see, a very easy way to identify a corrective wave vis-a-vis an impulse is just watch the momentum. If you see a flash momentum drop or rally, most probably it's an impulse or definitely a motive, if not an impulse. But if you see overlapping waves and taking time, it lags over the time as well as the structure is overlapping. It lags over the time as well as the structure is overlapping. That's the easiest way. I mean, you don't have to have any rocket science or any other technique to identify a correction. Only thing boils down is it it takes a while for everyone, each Elliotian, to figure out which corrective pattern is in the making, because there are numerous corrective patterns and combinations in the making. But identification of the corrective wave, two things very distinct. It drags over the time, and they are overlapping. So that is a correction without a doubt. Wave 4 has been shifted. We are still looking for wave 5 lower around 1.10560. and we should be there. I think this week, probably today in the New York session itself, price action should start moving over there. All right. So trading point of view, please continue holding short positions with the stop loss around 109.85 and targeting 105.50, 105, 102, sorry, 101 and 100 as well. We're actually going below 99 in the next several weeks as the daily structure indicates. Okay, so that is the story in the dollar index. Let us move the third high potential trade setup, and that is pound. This guy is not wanting, the bulls are not wanting to give up. The corrective structure prevails in pound, but it's so shallow. Okay, at the daily chart, I have to literally remove everything. It's better we stick on the hourly chart for now because the direction is certainly up. The lower degree waves are carving a wave 4 potential. We've got A, B, C. Now we've got D, and possibly there's going to be E as well. Look at and this is a classic example of a triangle actually, where we have A, then we have B, then we have C. So earlier we were talking about a potential WXY. WXY is also a 333 structure. Remember last session, the New York session, I think we were calculating it as a WXY or a combination. Now we are seeing another three wave rally. So that could be a wave D of a potential triangle. And that's what I keep saying. Corrective waves, they evolve as they evolve with prices. You come to know about the potential corrective wave in the making once they show themselves up. Otherwise, there are a lot of combinations possible. So now we are keeping our minds open that it could be wave D of the triangle and maybe wave E of the triangle is underway. Maybe it can dig lower towards 2605 or so. I think I mean, intraday traders, if you went long around uh, 59.90 or so, I mean, if you want to grab around 30, 40 pips for a quick short-term trade, you can do that. But if you're in for at least a couple hundred points, I mean, you can still hold on because that is just a corrective wave for a potential triangle in the making. We have, let me switch to the 4-hour chart. The only thing that is that the labeling will be a slightly more, it will be seen more actually on the 4-hour chart, but it's fine. We're now used to it. Wave 1, 2, 3, 4, and 5, the first impulse. And you never know whether this structure was a running flat. I mean, it cannot be, I cannot rule possibility of that particular structure because now it could be an ABC, another ABC, and another ABC. That's the 333 wave. It could be a super running flat. See, running flats are, as the name suggests, they are running actually. They are running away towards their destination. So they cut short of the pattern. They don't complete the pattern, and that's why the name running flat is given. So that could be a running flat as well, or it could be one, two, and the third wave in the making. All right, but either ways, the target is around 2800 in the near term, and time frame potentially is around this week. All right. Let's see when the markets are our bosses. They are always right, as we keep saying. Our duty is to just try and project the potential path. If it is okay, and then we are good in recognizing the patterns. If not, we might have just made a mistake, actually. All right. So it looks like a neat little wave. One, two, three, triangle wave, four in the making. And once again, I'd like to bring to your notice, gentlemen, brothers, a triangle breakout. A triangle normally precedes the last thrust wave, higher or lower, and the thrust wave would be quite fast, quite quick, and also big in momentum. All right. So if you really want to grab this opportunity of a triangle breakout, then hold on to your longs, please. The stop loss ideally would go below 1.2250. If you keep it at 1.21, that would be the safest way to place your stop loss, because you never know after 2800 a meaningful pullback can occur. All right. So the structure in pound is also in the same lines of Euro USD on the long side. Dollar JPY we are going to hold for a while. One, we've got at least three positions on the short side, and gold always keeps me on toes. But I like what it is doing, or what I like what I'm seeing right now on the chart. This could be a flat in the making. Uh, okay, either if a running flat is complete last Friday around 77, then we are in for a stop trigger going forward. But tell you what our habit is: once you've planned your trade and you've placed your orders, better stick to it. Either one of them is going to trigger. So we are holding our short positions, but we are not adding it further. The last one we did was around the 20 mark. But if you're just joining and if you don't have any positions in gold, the risk reward ratio offered by the metal right now is good, with around shorting around 32 and stop loss around 55. We always want to avoid noise. But one pattern which I would like to bring to your notice, if it is a bearish triangle in the making, then we are in for a very fierce kind of a decline. But I can see that five wave, that impulse is still holding true, because there's no doubt it was a five wave move. And then we have a three wave rally, uh, A, B, and C, and a three wave decline, and again a three triangle wave and five. So again a three wave rally. So if all these threes we combine, and if it's carving a triangle structure or a flat structure, then we are in for a big surprise on the south side. All right, so we are not changing the proposed trade direction in gold, with around 2800 and 2760 in the box going forward. All right. But we also keep ourselves open. There could be a possible flat or triangle wave four in the making as well, which would push another wave higher before the journey lower begins again. All right. If you look at silver, it gives us an idea. I think silver is carving a wave two. There you go. Or a wave B actually. And if you go by this pattern, I mean, at least we have a wave C, which is which could be on its way towards 30 levels. All right. So the structure is going to be clear in the next couple of sessions. Let's hold on to what we have planned earlier. We can pick up Solana. All right. I think Solana, while we were away in the last few hours post New York, it has managed to print yet another low. But tell you what, that low might have been accompanied by a good bullish divergence. I'm going to remove that target and I'm going to adjust wave 5 here. Unless it is wave 4 in the making, but I don't think so. It is already. Let's watch out the RSI first. And you see that drop. Let me zoom in a bit. That drop and the RSI here. You see the bullish divergence here. That's a good indication of potential. Not only the potential bottom is in place, but it's accompanied by a diverging scenario. So one thing is now more or less a high probability, around 80-85%. We can say that Solana has bottomed out around 161. Our stop loss placed at 150. So the trade is absolutely on the long side. And 167 is our trigger price or the entry price on the long side. Now I've got to adjust the Fibonacci a bit, but I think what we've done on the trade side looks good to me, and it also looks good on the probability of what could be in the store. There are a few possibilities if it's not an impulse because early the first wave begins with a three-wave decline. So it could also be an A, B, C, and X, and again an A, B, C. So it could be a double, it could be a WXY as well. But I would rather go with the first impression of an impulse because that is a clear wave one, triangle wave two, and then one, two, three, four, five, wave three, and a triangle wave four again. Normally, it doesn't happen when you see triangle in wave two and triangle in wave four as well. But this is what it is we are seeing on the chart. And finally, we have a five-wave decline. So I would go with an impulse, but then I would also keep an eye on the bigger picture that the the current impulsive drop could be a part of uh, the expanded flat structure. Got A and then B, and that could be wave C. So finally, we've got a minute wave 4 in the making. And tell you what, sir, if it is a minute wave 4 in the making, we've got a long way to go towards minute wave 5 in the making, which finally would go and trigger and hit prices above the 286 mark, possibly towards 318. Those are the targets we are setting up for ourselves. If we are absolutely wrong in identifying an expanded flat structure, at least we would not be wrong that there is going to be a high potential three-wave rally, and that three-wave rally is heading at least towards 247. Or if it settles around wave 4 of one lesser degree, it's around 212 at least. So it's good to remain on the long side, please. Even the 4 hour is picking up nicely. And finally, we look at the Bitcoin. It's going to be very interesting whether the triangle is It's out now. So I'm going to simply adjust my wave E. Now look at that sensitivity of the trend line, which we keep talking always. It's not a trend line though, it's just a triangle consolidation line. But look what happens. It pips lower, it just kisses humbly within the vicinity of the line, and back it is. All right. So I think we are really good to hold ourselves on the long side. That is all potential trades. All six of them are high potential trades, except the risk instrument gold. But gold is always like that. We've got to be very patient when we are handling gold. All right. So Bitcoin also, please remain on the long side. The stop around 89, just below that, uh, and you're good to go. All right, sir. So once again, thank you for your time. Thank you for tuning in, and we will be back again in a few hours during the London times. And I'd be happy to hand over to Igor. Back to you, brother.
SPDas,
Thank you
thank you
very
very
much.
much. Always a pleasure.
Thank you.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens gives you the edge. Forex Lens understands